Welcome back to The Explainer. Today, we're putting on our market entry analyst hats to look at something pretty massive, unlocking trillions in frozen B2B capital. We're breaking down Phamon, a B2B inventory liquidity protocol. If you track supply chain efficiency or enterprise capital allocation, you already know that physical inventory is often the absolute heaviest weight on a company's balance sheet. Well, today we are going to map out exactly how this platform proposes turning that static weight into working capital. Capital is frozen, margins are eroded, trust is absent. That's the macro market failure we're dealing with right now across global supply chains. Businesses are incredibly rich in inventory, literally warehouses packed to the ceiling with goods, but they are critically cash poor. And when they finally need liquidity, the current system offers zero trusted, efficient exit strategies. It essentially forces them into these brutal fire sales that just completely destroy their margins. Enter Phamon. And what's super interesting here is that this isn't built to be just another digital bulletin board or a standard marketplace. It is foundational infrastructure. By creating a universal liquidity protocol, they're essentially letting B2B enterprises use their existing sitting stock as actual currency. It's a total paradigm shift, moving from viewing inventory as a sunk cost to treating it as a highly liquid, tradable asset. All right, here's our due diligence checklist for today. First, the trillion-dollar liquidity trap. Second, Phamon's smart trade protocol. Third, a case study on the Lubrix swap. Fourth, margin recovery and capital velocity. Fifth, unlocking a 10 trillion TAM. And finally, the pre-seed entry strategy. Let's kick things off with Section 1, the trillion-dollar liquidity trap. $400 billion. Let that sink in. That isn't the GDP of a small country. That represents just the frozen capital trapped right now in the automotive aftermarket alone. It's a highly fragmented, incredibly illiquid space. Distributors and wholesalers are sitting on absolute fortunes in perfectly good parts, but they can't maneuver because their cash is completely tied up. And honestly, this $400 billion is just the tip of the iceberg. It's just the initial pain point this platform is targeting. Which brings us to Section 2, Phamon's Smart Trade Protocol. So how do we actually thaw out all that capital? The core product moat here is this incredible counter-offer engine. You're essentially dealing with a live trading floor disguised as an in-platform negotiation chat. It's way more than a standard buy it now button. A buyer can propose a direct swap, like, hey, I'll give you a gearbox for that suspension kit. The seller can then accept, reject, or counter that offer, maybe asking for a little cash top-up just to balance the scales. That ultimate flexibility, that's what unlocks the liquidity. Let's see this in action with Section 3, a case study on the Lubrix swap. This is essentially high-tech corporate bartering, and it's brilliant. Imagine a lubricants company. We'll call them Lubrix. They desperately need TBR truck tires for their export transport fleet. Normally, they'd have to bleed $30,000 of hard cash to get them. But here, Step 1, they simply list 30 grand worth of their surplus lubricant drums on the protocol. Step 2, they propose a cross-category swap for the tires they need. Step 3, both sides agree, and a smart contract executes the trade. Boom! They just financed critical operations using dead stock, systematically preserving their cash flow. Now for the hard financial edge, Section 4, margin recovery and capital velocity. 17.5%. When companies are forced to use traditional liquidators to clear out old inventory, they take a massive haircut. Their profit margins are absolutely destroyed. But here, Phamon achieves a 17.5% margin recovery on every single deal compared to those standard fees. That is real, direct capital being saved and injected straight back into the enterprise's bottom line. And it gets better. We have to talk about cash preservation. Businesses using this protocol see an 80% reduction in the actual cash required for inventory acquisitions. By trading what they already have for what they actually need, they protect their cash reserves. This is a total game changer for balance sheet velocity, giving companies the agility to survive and grow without relying on expensive external financing or toxic debt. Moving on to the big picture in Section 5, unlocking a 10 trillion TAM. Because this counteroffer protocol is entirely agnostic, meaning it genuinely doesn't care if you're swapping car parts or medical supplies, the expansion strategy is wild. The initial wedge is dominating that fragmented $400 billion auto aftermarket we talked about. But the ultimate vision? Expanding into a jaw-dropping $10 trillion universal B2B inventory market. The protocol lets you negotiate any inventory against any other. That means literally every single B2B company holding inventory globally becomes a potential user. For an institutional investor looking at market entry, that scalability is absolutely massive. Let's wrap up with Section 6, the pre-seed entry strategy. Right now, they are raising a highly targeted $300,000 to $500,000 pre-seed round. But here's the critical part to note. This isn't just some pitch deck with a pipe dream. This capital is meant to scale a platform that already has a live, functioning, minimum viable product up and running with 17 active categories. They are building from a foundation that is already proving the core unit economics. So, where exactly does that money go? The deployment is super structured. 40% is going straight to product and engineering to optimize the tech, things like the smart contracts and their AI assistant. 30% hits sales and market entry, aggressively targeting business onboarding across the vital GCC and East Africa trade corridors. 20% is for marketing and brand. And crucially, 10% is locked in for legal and compliance to ensure strict GDPR and EU regulatory standards right out of the gate. So, we've unpacked the trillion-dollar problem of illiquid inventory and how the smart trade protocol turns dead stock into a vibrant currency. I'll leave you with this final provocative thoughts. In a world of frozen assets, are you ready to unlock universal B2B liquidity? Think about the supply chains you interact with or invest in, and imagine the massive velocity that could be unleashed if their inventory suddenly became liquid. Thanks for joining me on this explainer, and stay curious.